Before we start underwriting this private money lending deal, I first would like to explain everything we look for to determine our decision to lend or not. We look at the character of the borrower. How they fill out an application tells a story. We look at the borrower experience level, the borrower financials, property ARV, that's after repair value, property as is value, the loan amount requested, and the borrower exit strategy. If all these items check out, we will make an offer to lend. If the offer is accepted, then we move forward with more due diligence, like property inspection, borrower submitting their track record, and bank statements. Now that you understand what we are looking for, let's get into the underwriting.
Borrower estimated credit score is 730. The subject property is 1833 North Russia Street, New Orleans, Louisiana, 70119. And the total living square footage is 1,010 square feet, 3 bedrooms, 2 bathrooms, single family property. Estimated current value of the subject property, 120,000. Estimated value after rehab, 260,000. Loan amount requested, 120,000 plus rental costs.
And 0 years of experience. So
0 years of experience. Yeah. Describe the use of funds to flip a property for profit. All right. I plan to pay back the loan 6 months to a year of borrowing once I sell the renovated home. All right. How long do you need the loan for? 12 months. Purchase price 120,000. Hold on. Purchase price 120,000 and 100 loan amount request 120,000 plus rental costs.
what's the as is again? So is it
So they didn't put, they say 120,000 plus the rental cost. Like they have to put that in here because they purchasing it at 120,000. You see what I'm saying?
yeah, and so now we're entering a property with zero equity.
Yeah, but they
Zero
just don't know
value.
the rental cost. So like they saying loan amount requested is 120,000, but they didn't put the rental cost in this request because the
Yeah,
purchase
but in
price
addition to the
120.
purchase price is 20 on a property that's 120, right? So we're entering into the agreement with no equity.
Yeah, yep, that's true too. All right, so they had the construction cost 50,000, but why they just didn't say the 170,000 for the loan request?
Mm.
I don't know. All right. Yeah, that confused me for a second. But I guess the loan amount requested is 170,000. And they say they could put 20% down. So let's see if the numbers check out. They're gonna have to put more than 20% down without the equity, huh?
Definitely, you already starting at zero. Yeah, you're starting at zero equity, and I'm not understanding. We're investors. You want to start off with some equity.
Yeah.
And I guess the importance of that, even though you injecting, or even though you're gonna do what they call forced placed equity, the fancy words,
Mm-hmm.
for a renovation project, just as an investor, you just don't know what can possibly happen. And so I'm not seeing how, you enter into a project with zero equity.
Yeah.
Like on the front end of it, that's not a good sign.
On the assessor's website, and we're gonna verify the square footage. All right, building area square footage is 1,000 square feet. This the property.
And she said 1,010. I believe this is a listed, yeah, you can see it's a listed property. Let's see what it says on MLS.
10/1/24 withdrawn. So this we could assume that the property looked like this.
Yep. Because the assessor site is yep. Yeah, so I do remember seeing this property.
And it's a shotgun. It's one of those New Orleans shotgun houses. And for her, right off the bat, for her to get 200 and I think she said 270,000 as the ARV. She
I thought it was 260, but you might be right.
260, what 260 is the for her to get 260, she's gonna have to change the layout of this property. Like you're not buying a $260,000 property when you walking through the living room, bedroom, and bathroom to get to the kitchen and to
So
get to your
shotgun pretty much means there's no hallways, there's no separation of the rooms, right?
yeah
Because you're
260.
just walking through every single room, and those are popular type style homes in the New Orleans market. That has been like that for decades, but when you're renovating now, they are renovating to separate to accommodate today's living style, if that makes sense.
Right, exactly. So just seeing this without even looking at the neighborhood just yet, 50,000 is not going to get it to 260,000 in value
Well, let's
because
see. You might be
well, I'm just thinking
jumping the gun, maybe.
you have to change the layout. You have to change the layout of the property. So you
Yes,
move,
I know. You think so?
yeah, like a shotgun property. A shotgun, you not selling a shotgun property in New Orleans for no $260,000.
Let's do the evaluation and let's see. Let's see what ARV says though. Let's
Yeah.
let's see. Let's get it done.
Yeah, we're gonna get it done, but I'm just saying, you know that. Like you're not selling a shotgun house for two
I don't
six.
I don't assume. I'm not
Well,
assuming.
this experience right here, not an assumption. This experience right here.
Okay. Let experience talk then.
Yeah. All right, 1833. No Russia blade.
Is this okay, so this around this where you went to school at, huh?
Yeah, I went to
It's your
school at,
neighborhood. This your
yeah,
neighborhood.
right
I got a
there.
lot of stuff going on over here either.
Yeah.
I can almost guess how she got the 260 though. Obviously they crossed over Saint Bernard into the other neighborhood.
Yeah.
In between Saint Bernard and North Durgeois, going into closer to what's that? Is that Esplanade?
Yeah. Going this way. Yeah,
Yeah,
they
going that
yeah.
way towards Esplanade. Yeah.
Yeah.
Totally different. Our neighborhood, you agree?
Yeah, definitely.
Yeah,
You
totally
know,
different.
for all of the new people that's watching, when we underwrite these properties, we don't cross main streets because in New Orleans, if you cross main streets, it's a totally different neighborhood. Like comps in this neighborhood and comps past this main street, St. Bernard Avenue, would be totally different. So we try to
And,
stay,
and, and the type of housing too. The type of
yeah,
houses are different.
yeah. But they do have three new constructions, but of course, new constructions are not comps. But
Well,
even the
off the top, if you look at the new construction that sold at 269, there's no way that her property, that's
yeah,
only a $9,000 difference. So that's a nice one though. I like that color. Go back to the exterior. They did a good job on that.
yeah, they did a really good job.
I have to steal this floor plan. Yeah, that's nice.
Yeah, they did a good job.
That's really nice.
Yeah,
Awning and everything. They went out on this one. So just looking at this one compared to ours, guys, 260, this one sold at 269. There's
yeah,
no way that her property, a renovated shotgun style, like Elridge said, property with a $50,000 budget is gonna get her to, and then her property is 1,000 to 1,010 square feet. This one is 1,060
one thousand.
693 square feet. And
Yeah,
it's a new construction. So I hope you can see the comparison. And then the one right below it at 240 is also, that sold at that's a new construction. And if you remember what ours looked like, so off the top, she not even coming in at 240. And if we go one more below at 219, you see how it's already setting itself up? It's already
yeah,
setting itself up that her 260, if this
yeah,
house sold at 219, that's the top of the market.
yeah. That's the top of the market. And then, like I said before, the 50,000 renovation budget is not going to get it in this condition. And then she got to change her layout. You know,
Mm.
so yeah, and also these properties are bigger. Hers is 1,000 square feet. This one 700 square foot bigger. This one 300 square foot bigger, and this one 58 square foot bigger. So it's about the same on that one. But this one is also a new construction. But look
Yep.
at this is beautiful.
I actually like those two these two stories. That's really good. We got a property on St. Anne we might need to
Yeah, we might have to do
look
that,
into
huh?
this one. Yeah, I like this new construction right here.
And
Oh,
then
and
the lot looked narrow too, and they
yeah,
they got a lot out of it.
they did. They got a lot of it. It looked good.
Yeah, it looked good. Yeah, they did good. They did a good job. But so we don't see any excellent condition. So even though we're looking
Let's
at
see
new
if we can go
construction,
back 1 year though.
yeah, we already back a
Oh, you
year.
already 1 year already. Got it.
Yeah,
Yeah.
so I don't know if I could expand the search, but this one right here, let's look at this one. Well, this considered very good to excellent, huh?
Yeah, and that's on George Nick. Let me see how much they wanted for that one.
It sold for 182.
And what's the square footage on it?
Well, let me go back. So 924. So it's around our square footage. It sold for 170. My bad,
It's
170.
over 170. They're a little bit smaller, so they went up higher on their dollars per square foot. They
Yeah, but
went
not
up higher on that 184, huh?
not much smaller. It's only like 70, 80 square feet smaller. Yeah.
So you believe her ARV is more like 170?
Yeah, I think ARV is definitely not 260.
So that's like $100,000 down. I mean, we could make her an offer, but it's gonna be it may look insulting to her because we automatically took $100,000 off her ARV.
Yeah.
The 120, did we even check the as is on that to see if that's even correct? Her purchasing. So all around the numbers ain't mathing, right? Because she buying it at retail, and then the retail may be too high.
Yeah.
So she's just entering the deal the wrong way.
Yeah, for sure. Yeah.
And that's with zero equity. And so she's not even protecting herself.
Right.
Right. Her 120 that's at risk automatically at the top at the beginning as we enter into this. And I'm not sure if we could, she's not gonna accept the offer. I mean, that's just the bottom line. But
I'm not sure if we even make an offer on this, honestly, because she buying it at 120 and need 50,000 to put in it. And once she put that 50,000, is like she's still
it's
at,
not gonna look like that one.
yeah, it's still gonna be retail. So, like, and she may be a little upside down. Who knows? Because
When
um
you add our points and fees, she is gonna be upside
yeah,
down. But 170 gonna be like what?
but yeah, like probably like 180, after she paid carrying costs and all of that. So yeah, she gonna be upside down. So on this one, me personally, I feel like the borrower experience level don't check out. She don't know her numbers. We're not gonna put our money, our capital at risk with a borrower who doesn't know the numbers on our property.
All right. Well, it seemed like we kind of like at an agreement on it.
Yeah.
That it's a little risky
Yeah.
to put our capital with the borrower. And hey, it's nothing personal.
Yeah.
It's just
Definitely not personal. Yeah.
we have to look at all those risk factors. So there you go.
Yep. So it's VC denied.